Brought to you by Credit TV and Credit Life Financial Wellness. This is our weekly talk show about all things credit. I'm Jeremy Dysock, FICO certified credit coach.
Jared Havens, co-founder and CEO of Credit Life.
I threw that over onto
Brian
Kurzweil, I guess.
Nice.
Brian Del Terzo, co-founder here at Credit
Yeah,
Life.
with us today.
And we have company.
Yep. Yes, we do. We have one of our preferred affiliates from the Right Way to Real Estate program. We have Mr. Brian Kurzweil.
Hello, everybody. Thanks for having me.
Yes.
Excited to be here.
All right. So today's topic. Give us today's topic.
All right, perfect. So we're really excited about today's topic. We're going through an introduction to budgeting with what I call spending with a plan, mindful spending. So that's what we're going over today. But I'm really excited. The first part of our show, we're going to be talking about the Right Way to Real Estate program.
That's right.
Knowing that we have a preferred partner, a certified Credit Life partner on the mortgage side that assists our clients when they're entering into our program with Right Way to Real Estate.
So, everyone watching out there, if you're in the free credit repair advice group, if you're watching us on YouTube, on Credit TV, or any of the animals, if any of you animals are watching on any of the channels that the animals watch us on, if you're watching us on any of those things, something special about our guest today. We've got a history with him. Those of you who've seen or heard us before, you hear us drop the term FICO certified. FICO certified. We're FICO certified. That's what makes us great credit coaches. That's why you should never question us, right? So we drop FICO certified all the time. Something special, random piece of trivia, aside from the fact that he looks like Russell from Up, is that Mr. Brian Kurzweil is a FICO certified. What are you now? You're no longer a credit coach.
I'm a loan originator.
That's amazing.
Mortgage loan originator.
That's amazing.
The only loan officer that I've ever heard of or know of that is also FICO certified.
Yep. We are 60% certain that he is 100% the only FICO certified loan officer.
That's about right, actually. That's about right. I would agree with that. That's awesome.
So our topic that we're dropping down today?
Well, before we get into that, I want, knowing that Brian's on, I want to touch base on the Right Way to Real Estate program with everyone. For anyone that's been watching and wanting to know more about it, I want to go through and talk with Brian a little bit about the experience he's had so far. What we do in our process, when you come to Credit Life and you're looking to get in the best position possible for a mortgage, you want to buy that home, you're sick of renting, what we do when you enter into our program is we get you connected with a certified partner within this specific program called Right Way to Real Estate. And so the first step in that is actually connecting with a loan originator, a loan officer. And the reason being is that it's very important that when we're working on your behalf when it comes to credit repair, credit building, debt management, financial wellness, we also want to make sure that you're being proactive in what it's going to take to be approved for a mortgage.
Right. If your goals are specific, and your goal can be, that specific goal can be broken down almost to the minute by a qualified loan officer like Brian here. If your goal is specific, it may be that you need, specifically for the program you're looking at, you might need 2 credit cards instead of 1, or you might need 2 years of history instead of 1 year, or 3 years. You may need such and such amount of time since a bankruptcy, depending on how much you're putting for a down payment, depending on all these different factors. Once you have the opportunity to meet with a loan officer, and I'll tell you, there aren't a lot of loan officers out there who will necessarily meet with you until you're ready to buy. They won't just take that time, but
or want to take the time.
Right. Guess why? Because they're not getting paid for that. But as a as a partner in Right Way to Real Estate, the powerful loan officers that we've chosen for this, the affiliates, they are so good, and they know that you're going to be coming out of this so strong that it's a great investment for them to spend that time with you. I mean, it's a completely flip of the script. So you can meet with, Brian. You can talk with Brian. He can tell you, okay, you'll need specifically this score. Maybe you'll need specifically this profile, this type of thing. And then when you come back, if you're sitting down with a coach at Credit Life, or even if you're trying to do some of this yourself, whatever steps need to be taken, you'll know. Because as we always said, if the goal is specific, the steps you need to take to get there also have to be specific, so that becomes part of your plan.
Well, and one part that I like about it a lot is that when you are, when you're coming to us and you need help with credit repair and credit building, based on other factors when it comes to the mortgage, like income, down payment, there's a lot of other factors to the mortgage process. It's important to be proactive in understanding what that looks like in advance. And also, too, with Brian, if there's anything that pops up where he's like, in this case, ideally, we'd like to maybe go for conventional lending. Well, then at that point, to what you said, Jeremy, the steps will be specific, because then we want to get in the best position possible for that type of mortgage, and that really helps us for our program to do better for our client, and it's a win-win-win all around. It really is.
Right. What's your experience been, Brian, with people that you've talked to who are going, okay, we're getting into a program, we're going to want to purchase a home. That's our why. That's our goal. That's why we're doing this. So this dream, this goal, this is what we've got. We're going to be working with Credit Life, or I'm going through credit restoration myself, or I'm doing it myself. I mean, these, it's not an infomercial here. This is literally, what types of things do you tell someone when they're starting off? We get that question a lot. Where do I start?
Yeah, absolutely. What I love most about it is how early I get brought in. Now, most loan originators, they want to get the phone call from the client or the lead from the realtor when they're ready to go, or when they find a house, and then I can work up a quick pre-approval. And that's, I really like to work backwards. I want to get involved as early as I can, and I want to make that phone call as early as I can,
Mm-hmm.
not only to introduce myself, but let them know any questions. Jeremy's here, Jared's here. Not only that, I'm here. Any questions that you have about the restoration process, or should I do this? Should I do this? Should I pay this off? Like they mentioned, I'm also FICO certified, so I know the ins and outs. So the thing that I like most about this is that we're building a dominant team to make sure, I've said it 1,000 times, I actually said it twice in a realtor meeting this morning, we can get your kids into a backyard. I've said that so many times in my 10 years of doing the credit repair, credit education, because that's what it's all about.
Mm-hmm. That's why I tell people every time I do my job right.
I probably learned it from you.
I think you probably did. I did the story about.
I probably heard it from you.
It was my story about the gal I had bought the swing set for with the money I made off the loan when I did it. And it's every time I do my job right, kids get a backyard to play in.
It's amazing.
Absolutely.
Yep.
That's really cool.
That's so neat.
I like that. I really like that methodology, because what Brian's talking about, there's so many times that someone, you're renting right now, and you're thinking, I really want to stop rent. I'm paying so much in rent. Rent is so expensive right now.
Yeah.
It is.
And there's actually a really cool calculator where you can show, and it's a kind of sliding scale.
You just said there's a cool calculator.
There's a cool calculator.
A cool
Nerd.
calculator.
It's true.
Nerd. Nerds.
Check this out. So it's a sliding scale, and it'll show you, based on where you're at, what type of mortgage you could potentially be approved for with the rent that you're paying for right now.
Yeah.
Oh, that's
pretty slick.
I don't think that sounds horrible.
Well, it puts it into perspective.
I
when
wouldn't
you realize.
that would be painful to look at that. Why would anyone ever look at that?
Well, it's because
It's
you want
because
to
probably
have,
it's a good idea.
yes.
Yeah.
It gives you awareness to realize, oh my goodness, what am I doing? I'm paying someone else's
But
mortgage.
ignorance is bliss.
Yeah,
And I am
exactly.
thrilled.
Interesting. Very good. But no, seriously. Think about it. So it's like you go and you
Yeah.
have that awareness, and you realize, wow, okay, I want to be approved for a mortgage. Then you go and apply. You a lot of times the first step is the wrong step. They reach out to an agent, because they want to, shop. Hey, I want to, they go to an open house or something, right?
Right.
I'm not saying you can't do that, but you really want to connect with either a loan originator or you want to connect with Credit Life, because they're going to be the ones that are going to show you, here's what needs to be done,
Well,
right?
the agent's not helping you pay for it.
Exactly. They're going to
So,
help you shop around and
right.
negotiate and all those things. But if you think about it, when you connect, if you don't go through a program like this, typically what happens is you apply. Let's say you're denied due to credit.
Okay.
They tell you, hey, you're denied due to credit. Fix that, come back. There's no guidance. It's very rare to receive any guidance. What were we going to say?
I was going to bring that up a little while ago. Is we've all been doing this, or I am no longer doing the actual credit education and credit repair.
Man, yeah, you left us. What's up with that?
We've all heard hundreds of times that the loan officer said, call me in 6 months, go fix your credit.
Yep.
What if I knew what the hell that meant, I wouldn't be in this position.
Right.
What do I need to do?
Yes. Thank you,
And
Einstein, for that
thanks.
wisdom.
That's what this team is built around, is so you don't get that answer, so you don't get that response. I shouldn't say answer. So you don't get that response. And if I'm not qualified now to buy a house, it's not, well, can I ever buy a house? It's when can I buy a house?
When and
we
and
will
how?
get you in position to buy a house if that's your goal. FICO's math. FICO's an algorithm. We can't force you to do the things we're going to tell you to do, but we know for a fact what it's going to take for you to buy that house.
Right.
And there's no team out there. I'll put money up. There's no team out there that's doing what we're doing.
No, there really isn't, and we see that. We see that every day. We get people coming in. So and so told me this. They told me to check my Credit Karma. They told me to,
well, there's loan
pay off.
officers.
Please pay off all your collections right now because your score will go up.
Every day that I've been doing this that are very successful. that say go pay those collections off and call me.
Add an authorized user, even though Fannie Mae, Freddie Mac, FHA, VA, and USDA will require them to disallow the authorized user. Amazing.
There's all sorts of stuff. I mean, that's the whole point of what I love what you said there, Brian.
Yeah.
Is instead of getting just that straight denial, and then give maybe even bad advice or bad counsel, it's about knowing, okay, hey, you're not approved now, but here's what we're going to do. Here's how you're going to get to your goal. And then we start creating that plan. Right. That's really powerful. So that's extremely powerful for anyone in our program, the Credit Life Credit Improvement Program. But if you're listening to this right now, if you're in the Free Credit Repair Advice Group, if you're on our YouTube and you want to learn more about the Right Way to Real Estate program, it is not a requirement to be in the Credit Life Credit Improvement Program to participate in Right Way to Real Estate.
How much does it cost you to join the Right Way to Real Estate?
$0. $0. It's about the network. It's about going through and doing it the right way. That's why it's called that.
Yeah, that's why I said it wasn't an infomercial.
Let's figure this out. And yes, if you need help with your credit, are we able to do that? Of course we can. That's what we do every single day.
And I
do
it even better.
But it's just that first step. That's the key thing.
Well, the cool thing to Jeremy's question there, Jared, I think what's left out is it doesn't cost anything, but it also sets you up with some people who understand what you've been through, what you're going through, and where you want to be. Yeah. And gets you money back at the closing table.
Explain that. So I get paid to join it.
We've made arrangements with,
he said knowingly,
across the country with loan officers that have handpicked real estate agents that they trust to take care of their clients. And those real estate agents have agreed to help with a how would you refer to that, though? Is this just like closing credits?
It's a cashback incentive.
Man,
let's put it like this, man. They are willing to put their money where their mouth is, that they think anyone who's touched us and touched this program is so powerful that they're willing to drop some coin to get you.
That's buying
They're
power
fighting
right there.
for you.
Think
they are like
people. I mean, over the years, they've been like, I buy this house. I know my real estate agent's making money. I wish he'd just buy me a washer and dryer.
Yeah, 800. You can get up to $800 back right now, is what I'm hearing.
Yeah, and now you can get up to $800 back at the closing table. Buy that washer and dryer yourself with the money and
hot tub.
And you get to go house shopping with confidence because you know you're pre-qualified. I mean, it's a phenomenal opportunity.
That's awesome.
And that's from the agent. That's on the agent side.
That's right.
And on top of that, the
but
loan
wait,
officer
there's
does
still
a
more
lender credit. So literally, in theory, you can get up to $800 back in cash incentive at closing for the washer and dryer or whatever. The loan originator also does a lender credit, usually around $250, which is still huge. So now you're looking at what, $1,050?
They'll dang near pay for your appraisal.
I mean, that's amazing.
Jeez.
Yeah, that's one of those surprises.
So like literally, so we're talking like you get $1,050 back because they want you. Because you did this program and got smart about it and did it the right way and then didn't get taken advantage of or make a bad decision, and there's not a cost to join it. Well, there's no downside.
You become a premium client because you're ready to go.
That makes sense. Well, I think we should go Thunderdome. We should put like two realtors up against each other to fight for you and have like two enter and only one can escape. I'm not really doing that because I want them to fight for you. I was thinking I could get rid of half the realtors.
Well, I think if you really kind of lay this out,
there can be only one.
It's really because you as a client, as a person, you're taking the proper steps to be informed, to be informed borrower, to be prepared for the mortgage. You're informed when it comes to the buying process. You're also now informed and taking the steps necessary to maximize FICO score improvement potential and have the best profile possible based on your situation and time for everything related to that mortgage and transaction. I mean, that's the power of it. That's why the agents across the country are so excited about participating in this program. Because of that reason, why they're willing to contribute at the closing as that cash incentive.
It makes sense. They know you're going to be ready.
Exactly.
They know it's going. I mean, as far as talk about an easy transaction for a realtor, I mean, this is a person that they don't have to worry about, are you going to qualify? They're not going to worry about, do you understand what's happening here? They're not going to have to worry about that. It makes sense. The whole dang thing makes sense. Why doesn't everyone do this?
When it boils down to it, nobody asks a bank or a lender to borrow $200,000. $300,000, $600,000, never. Unless you're
I do, but you know what? Do you know what happens?
Be quiet, Jeremy.
They say no.
Unless you're buying a house,
they always say no.
You need to make sure that you're working with the right people that are on your side.
So, like, if I want to buy a Maserati, I just go to the bank and I want $600,000.
And cut to Jared.
Oh, dang.
Exactly.
This is why we can't have nice things.
Jeremy's obviously super excited this morning because he's just nonstop talking. No, I'm just kidding.
He's got a Sprite because there's no caffeine in it. Oh, but a Monster.
Yeah,
right
then I have
next
a
to it.
Monster because I had the Sprite, and then, I realized halfway through there's no caffeine, so I had the Monster.
You just realized that at your age of 50 that there's no caffeine in Sprite.
Back when I was a kid,
When you had to
There was
walk through
caffeine
uphill
in Sprite.
in
both
19
ways
when I
to
walked
school.
uphill to school both ways through 9.5 feet of snow in that desert.
In that desert.
I wish we could just talk about that drive to work today.
Oh my
Oh,
gosh!
just the whole
Okay,
time.
any of you who are watching that live in the Minneapolis-St. Paul area, do me a favor, and when it snows for the rest of the year, just stay home. Don't go on the roads.
Well, the interesting thing for me this morning commuting in was there was no snow on the freeway, but yet it was bumper to bumper traffic and there was no accident.
It was implied snow.
It was like, what? Like, why is
Yeah,
this
it was-
happening right
it was
now?
just ridiculous.
It was kind of a suggestion of snow, so you know how
Oh
people
my
get.
goodness. Well, before we get into our topic, because Brian has to cut out early.
We have a topic?
He's actually be connecting with he's gonna be connecting with the borrower, a client of his here. Go through, not to put you on the spot, but go through your story a little bit. Talk about your passions, what got you into mortgage, and let people know who you are.
No, I'm just kidding. I had a family friend that introduced me to the credit repair world, credit repair business back when I was like 26, 27. And I got into it knowing a little bit about credit, a lot less than what I actually thought. But really ended up doing that for 9-10 years, and throughout the process just learned. I loved it. It was the second most rewarding job I've ever had, now getting people into homes. But before that, it was doing the credit repair days, which I absolutely loved. Just being able to educate people on something that there's no high school course, there's no college course, there are some community ed classes, but really what do they know kind of a thing. Just being able to truly educate and help people get their profiles in a position to, whatever it is, refi their auto loan or go get another auto loan or purchase a house or open up a credit card that they can't. So I got into that, did that for about 10 years. And throughout the process, I met some great people in the lender, loan officer industry, mortgage industry, and some whispers in my ear, come do this, you'd love it, you'd be great at it. And decided after a while to reach out to some of those people, some of those owners of a small independent mortgage company, and got licensed within 3-4 months. That was some awful 3-4 months of my life, but now it's all worth it. And now with a company called Fairway Independent Mortgage Corporation, one of the largest mortgage companies, independent mortgage companies. I'm not a bank. We're not a bank that does mortgages on the side. We are strictly a mortgage company of about 7,000 employees. Huge company based out of Milwaukee. We do have loan officers in every state. I am not in every state, but it is the best transition, best choice that I decided to make February of this year, to leave the company that I was with to go to Fairway, to more of an independent mortgage company with the best processes and systems that I've ever seen. And extremely excited about the future and this program and continually working with Credit Life.
That's amazing.
Very cool.
How can someone get a hold of you? Is there a best way?
Fax.
That's fact.
Yeah.
Back when I was a kid, walking uphill both ways.
I hate those
to the
darn
fax
spam
machine.
faxes.
No,
The curly ones with the heat transfer. Your fax is just a coil.
I'm pretty active in the Facebook credit repair group that's here, and then also obviously phone number 651-230-5684. And again, my name is Brian. 651-230-5684.
Sweet.
You can always connect on email, however, Facebook Messenger, however, whatever's easiest.
That's cool. That's cool.
Awesome.
Cool. Yeah, man. Thanks.
Let's cut to commercial, I guess. Right?
thanks for joining us today.
We the whole first part of it, it's about the right way to real estate, pretty much covered that. I don't
really
know. Can
did.
we just go right into this? No, you don't want to do that yet.
Because Brian has to leave.
I got it. Yes, I
So
got
I
it.
can talk while he's
Yeah, pop over to yourself.
So
So,
let's do it.
Brian, thanks for
Thanks for
joining
having
us.
me, guys.
Yeah, thank you,
Appreciate
Brian.
it.
Thank you very much. So, one of these things here that that we're going to be talking about with spending with a plan. So spending with a plan comes with considerations on what kind of avoiding the debt loads that we get ourselves into. And so I pulled this information that came from actually data through Experian this morning, giving us some idea of how much debt there really is here in the country. So if you consider how much do you think we have we've talked about student loan debt. How much do we think in the U.S. do we have in credit card debt amongst all of us human beings?
That's tough.
I have not looked into that lately.
$29.
Give me a hint.
Well, we're in the billions.
Okay.
and
$29 billion.
It's above half of a what would that be? Half a trillion? Yeah, it's
Twen-
above
2,900
680 billion.
600.
Well,
what do you think?
$1, Bob.
No, it's actually 829 billion.
Oh.
The prize goes to Jared Havens.
Woohoo!
So
I
that's
thought it was that you had to guess. There was you couldn't go over. It's like Price is Right.
He was under. He was perfect.
I was after that fridge.
he was perfect. And here's the thing, though. I mean,
Okay.
the government itself is in a lot of debt, so we're just kind of following suit of the leaders of the country, right?
Okay,
I mean,
so it's
we're
okay.
spending ourselves into trillions of dollars, so why can't we as consumers have billions of dollars?
Seems
and
legit.
I would say because having all that debt does not give us very good peace of mind.
Why don't we just do one giant collective bankruptcy?
It's just there is talk of that.
Oh God, I was
Not
kidding.
for real.
Don't
well,
no,
you know,
don't.
the conspiracy theorists out there about the reassessment and the realignment of everything would just wipe out all the debts. It's never going to happen.
Well, we have nuclear weapons. We can do whatever we want.
Oh my goodness.
Is that
Okay,
how that
so
works?
back. So of this
Oh, maybe that's not how it works.
$829 billion worth of debt, do you think people in the 20s, 30s, 40s, 50s, 60s, 70s, or 80s carry the most of that debt? What the heck is that, Chaz? This thing made a sound. Thank you, Chaz, for liking the stream. So what age demographic do you think carries the heaviest debt load?
50s.
Very good. Nicely done. Where's
I'm
my
gonna
clap?
go. I'm gonna go with 50s.
It is the 50s. Yes.
Yeah.
I'm going with
the
50s.
highest
That's my final
among
answer.
Consumers are in their early 50s, and I would attribute that to the fact that that's also when you're making the most money in your life. So you start probably realize, oh, I'm making a lot of money. I could probably spend more.
Well,
on
it's a
that.
mixture. It's a mixture. So when I was brought on to do that presentation with the Minnesota Attorneys Board for bankruptcy specifically, so all the bankruptcy attorneys talking about financial wellness and credit and all those things, it was really interesting to find out that right now the highest age demographic in filing bankruptcy, I believe they said is in their 60s.
Oh, no.
Wow.
Right now.
Well,
And
that would
so-
explain
and
they
were
spent their
saying-
whole 50s in debt.
Well,
Yeah.
what it is that a lot of people are obtaining more debt, and what they're finding through some research, and I'm going off of what I was told, is that the student loan specifically is hindering younger people so bad that now parents are having to help them more. They're now taking on more debt.
Oh, and then
now they get to their 60s and they're so in debt that now they're having to file bankruptcy.
So it's not only because they're
It's a
millennials.
So yeah, it's not
trickle-down effect.
their own necessarily their own debt. It's
Yeah.
them helping out their
It's
kids
what's-
when they weren't prepared.
So-
to do
Yes,
so.
that's
So
apparently
don't-
that's common.
Don't help your kids.
Well, I don't know about that. That's someone's choice. But it
Is
just
that
shows
right?
you, I'm sure you'll probably talk about, you bring up student loans at all on that?
I know.
In
This
debt?
one actually doesn't include. This is
Oh,
going to be
okay,
all
that's fine.
credit card
That's
debt,
like
this
legit
article.
just credit card debt. That's like,
Last time I looked,
Best
I think it was
Buy.
like 1.3 trillion in
In
student loan debt, I
yes,
believe.
that sounds about.
Could be higher now.
Crazy.
I mean,
so
that's
we
the
had
last
those
time I
together. We got $2 trillion. We got the student loan debt. We
And
got the credit
another
card
thing,
debt.
I don't know if this was brought up in your thing on your the info that you got, but right now on the auto loan side, I don't recall what the amount is. It's really high, but they're already starting to receive a high default rate on auto loans.
Oh,
It's
geez.
happening right now.
The auto
That's-
bubble.
Auto bubble.
Oh my
Something.
goodness.
You know,
Les auto bubble. It sounds
but
French.
I think that's really important to go
buble.
over and understand is that so many people are in debt.
Right.
A lot of credit card debt out there. A lot of high payments on auto
Mhm.
loans, right? Student loan debt with people who have student loans, so younger and even older with Parent Plus loans, right?
Right.
There's a lot of things going on right now. That's why this topic today is so important. You have to get an understanding and awareness of your financial situation, and that's spending with a plan and
Right.
budgeting. You know what I mean? Like if you're the type that you just log into your app on your phone to see how much money you have in your bank account, and that's what you can spend.
It's right here. I've got
is
it.
Yeah,
I got
the wrong way. And that's how most people do it. Literally, of all ages. This is not just a young person
Right.
problem. This is an everyone problem.
Wait a minute.
It's absolutely crazy.
I can't
how
be out of
we've
money. I've
lost
still got
track.
checks.
Yeah, but if you think about it, like even I don't know if they do this anymore, but when I went to school, in one of our courses, we actually went through how to create a budget with your checkbook and all that. You know, I doubt that happens anymore because no one uses checkbooks.
Right.
I don't know anymore in the schooling system if they do anything like that. But I can say that a lot of it, budgeting and mindful spending is a lost art at this point
It is.
of all ages. And that is a huge reason why it's easy to overextend yourself and constantly obtain more debt.
Right.
You don't know how to mindfully spend, so you're looking at your app on your phone and your Bank of America account or whatever. You overspend, and then because you overspent and then maybe had an unexpected expense, now you're leveraging credit card, and it's a horrible cycle.
Yeah.
And it just keeps
So
going
then you've
and going.
overspent. You've overspent the actual money you've got. Now you've just overspent money you don't have, And how could you possibly have? So without a plan, you're going to fail.
Yep.
You literally have more out there than you make.
And that's the thing too. It's like so many people I talk to, it doesn't even matter. Don't get me wrong, income's a part of it, right?
Of course
it can get to a point where it's like, hey, this isn't a budgeting problem. This is like you need to make more money problem. You know, that is a thing. But there are a lot of people out there that have an income. They have a dual household income. They might be making 100 grand, 200 grand, 300 grand. It doesn't even matter your income if and higher. There are so many people, even with high income earners, that still don't budget and fall into financial issues all the time.
Well, yeah, the more money you make, and I'm sure we all know because when we were 18, 19, 20, it was like $100 was like crazy money.
Oh man, that bought me 5 cups at parties. That was 20
So
weeks.
then as you get older though and you're making more money, then you can spend a little more freely. One of the biggest mistakes I see for people that are trying to figure out why they're getting to the end of the month and there's more month than they have money in their account.
Yep.
And they look at, okay, well, what are all these? What can I cut down on my cable bill or my phone bill?
Right.
These reoccurring expenses is what they look at. And I guarantee you, if you look at your budget, that's not where your money's going. You can't just cut your cable bill, that $100 a month out, and end up in a better position because now you're just going to buy a pair of sneakers with that money.
You know what it is?
Something's going to change.
For a lot of people, it's the microtransactions. It's like the new phase in cell phone apps and stuff where they get you by $1.99 of gold for your little game in your. So it's the same thing. $2, and I buy a couple of these a day. I'm microtransactioning myself $4. $4 a day on a work day. Okay, 5 work days a week. That's $20. 52 weeks in a year. That's $1,000 a year on Monster Energy drinks. I mean, that's insane.
Yep.
So it's and the thing is, I always tell people budget's like diet. It's this horrible, terrible sounding thing. It's like I have to give up everything that makes life worth living. I've got to give up a lot of my whys and things like that. But man, I don't want to spend $1,000 a year on Monster Energy drinks. So when you're talking about mindful spending or spending with a plan, things like that, I know they sell this drink in a case, and I know they sell it at Sam's Club, and I know I can get it for about $1.25 a can. So a little bit of planning versus that immediate gratification of grabbing it out of the cooler at the gas station. A little bit of planning, a little bit of, now mind you, it's spending with a plan. It is literally spending with a plan. I've got a plan that I'm going to spend this much money. I'm going to go to this store. I'm going to pick this up. I know I drink this many, and then if I cut it down to $1.25 a can, now I'm at half. I just cut $500 off of what I'm spending.
You're also actually planning and moderating on how much you're going to have that month. So what can I afford this month in Monster Energy drinks?
Right.
You buy the 24 pack and decide that's what I have.
Right.
If you get through your 24 in the first 2 weeks,
drink some water, man. Yeah, absolutely. Yeah. And the thing is so funny, literally that little plan. Oh, but does it take away the immediate gratification? Yeah, it does. Does it take away the impulse ability? Yeah, it does. But I'll tell you what, it didn't take away the number of those I drank and saved me $500. It literally changed nothing. So it's not like a diet. I didn't have to give it up. I just had to use my brain and a plan before microtransactioning myself to death.
No, I think that's important too. Like, I don't know if we were able to get that up, like our budgeting worksheet. Were we able? Is that in the tool section?
It is.
Yes, it is in the tools. It is in the tool section.
I could actually pull it up on the screen, I think, if I played around with this.
But it's in the tool section of your Credit Life.
Well, that's what I want to go over. So, as everyone knows, all of our listeners, we are all about the rock out action item. Okay, so we're going to start getting into this right now. And so what I want everyone to do is to go to yourcreditlife.com. In the upper right is the tools section. Okay, so click on the tools. If it's not in there now, we'll add it. But we want to add the Credit Life. You're going to access the Credit Life budgeting worksheet. Okay, it's a 3-page PDF document. Okay, now here's what we're going to do. You're going to download that it's already editable, so you can pull it up on your phone, your computer, your laptop. You could print it, however you want to go about doing it. Go ahead and access that and then download that. Okay, so here is the first step that I want everyone to do, and I'll explain why. You're going to download this PDF. And you're going to start going through each section. So you're going to put your income in there, right? And it's take home. It's not gross. Okay, we want to actually work with what's coming in. It's very important to know what's actually coming in and what's going out. You're going to go through each category. Category expenses, what they're called, right? So you have utility, you have food, grocery, food will be like, restaurants, dining out. All these different things are going to be in there. You start going through and I want you to really sit down and think about it, and I want you to make an educated guess on how much you think you spend in each one of those categories, okay? Now, can we just confirm if it's in the tool section?
It is in the tool
Okay,
section.
great. Then we're good.
Here's
That's fine.
The tool section itself, we can show you what that.
Let's
what
pull that up.
What it'll visually look like.
Yeah, let's pull that up real quick before I keep going.
Well,
here.
here when you get there, you'll see that news page there. It's just up in the what do you call those? The book, the pages up in the top
tabs,
tools,
the
and then you'll
tabs.
have a bunch of options
It's
in there.
Yeah, www.your credit credit life.com.
Yep.
Click that tools tab at the top of the page.
Yep.
Scroll down and you will see the budgeting worksheet.
Budgeting worksheet, Credit Life budgeting worksheet. So at this point, you're going through and you're making an educated guess on how much you think you spend in each category, okay? Now here's step number 2.
Number 2.
You are going to download your most recent 3 months at a minimum. Start with 3. Let's keep it simple. 3 months of your most recent bank statements, okay? So if you have one checking account, if you and your spouse, you each have separate, you're downloading both. You know, it's very important that if you have a spouse, whether it's a husband, wife, whatever, girlfriend, fiance, if you in any way budget or spend together in anything, you need to do this together, okay? It's very important that you get a holistic approach to this. And what you're going to do is you're going to start looking at the budgeting worksheet and the educated guess in each category expense where you felt you're spending a certain amount in that expense area, okay? So it could be dining, it could be Monster, it could be gas station, it could be anything, right? You got to go through and start tallying that up. And you are going to be, I guarantee it, you are going to be so surprised when you realize in certain areas where you are spending more than what you thought.
Microtransactions. What was it I said? I had done my, they gave me my spending outlook, and I had taken a look at what I dined out. Was it 2 years ago or whatever, when I dined out, and I was spending close to $5,000 a month in dining out.
Yeah, that was just insanity.
And
I'm sure it was great food though. Good times.
Oh, it was. I was. I used to be thin. I had hair. I was on that model circuit I was on. I think I was in Playboy. No, that's not a thing.
What is he talking about?
No, but it was amazing. And I look back at that, and it's like, what do I have to show for that?
Exactly.
What do I have to show for that? I have big old fat bottom and nothing.
Well, that is a statement that you hear so much, and it's
fat
been
bottom?
going around for a long time. No, it's what do I have to show for it?
Right.
I mean, literally, that's a statement that's been going on for a long time. So it shows you for a very long time, this has been an issue, right?
It has.
Well, I spent so much when I was younger and I was making money. What do I have to show for today, right?
Right.
You don't want to have that type of regret. Now, you don't want to live in the past either and be like, well, it's already too late. I mean, don't be like that.
Right.
But what it comes down to is awareness. You need to have awareness. That is the first step.
So it's more wrapping your arms around this, and it's not so much. I always tell when I have a client, I talk about budgeting. I always say to them, budgeting to me is like diet. It just sounds like something where I'm going to tell you, oh, you can't have this, you can't do that. But it's not so much that. It's understanding where the money's going. Mm-hmm. Once that happens, you start making different, almost subconscious decisions on a day-to-day basis. You're not making, it's not big decisions like, hey, I'm not going to have a car payment anymore, but it's littler things like, man, that soda's $2.09 for that Coca-Cola. Right over there, that 2-liter bottle is $1.89, and I have a cup, so I'm going to do that. It's going to last me long. You just start making different things, and then maybe you're going, hey, I want this, so maybe I don't want that.
Exactly.
It's so amazing. It's just so subtle. Let me ask a question before someone fires it back. So why 3 months?
So 3 months is the reason being 3 months. In fact, ideally, if you work with any sort of like Money Mastery, they go back 12 months, right? You need to look at an actual history and an average.
For your bank statement.
Exactly.
Right.
So you don't want to say, well, this month, maybe this month you didn't spend that much, but the previous 2 you did. So you need to average that out and actually go through and know and have a much better understanding and awareness of where your money's going. That's going to be step number 2, okay? And take your time with this. And I would highly recommend, do not just access your bank statement on your computer and don't download it or print it, just look at it. Don't do that. You need to download it and use Adobe and highlight things and make notes.
Feel the pain. Print it.
You have to.
Feel it.
I highly recommend actually printing it and highlighting,
Right.
just like we did with the credit report
Correct.
section of our show.
You can do the same thing, too, with highlighters. You can do a green, a yellow, and a red.
Yes.
Red is, what am I doing?
Green
Green is
really what it comes down to
the
is
car payment.
The red for sure. And It just comes down to, in any format that you can do where you can easily tally up in each category expense how much goes into that bracket. That's what it comes down to.
What types of things do you find that people forget a lot of time when they're looking at that? I mean, let's say like an ATM transaction. I know.
I was going to say cash.
I know. Typically, I can actually go into my bank statement and just I can take a look and I can go. There was what's nice is they typically give you like the address. It's like St. Louis Park. I took out $100. Oh yeah, I took such and such realtor out for a happy hour. Okay, that's right. That's where that money went. Or, I took it out on the way home because I knew I had to give the kids, because I have kids and they're god awful expensive. I had to give the kids cash for whatnot. So, do you think that's one of the areas where people fall down?
Cash is number one.
Okay.
That's typically where people either forget, they don't allocate for, they move past it. You got to make sure and do exactly what you said, Jeremy. You have to go through and think and go, do I remember why I took out that $100? It could have been why I got gas, but then I also purchased some snacks. I mean, whatever it is, you have to have, and just, if for any reason you can't remember, it is what it is, but really just put some thought and effort into this, because you want to get the best idea of true awareness of where your money's going. That is so important.
Going forward, you can make it perfect. I mean, you can keep receipts. You can watch where you spend every dollar that you spend. It's real easy to do that going forward. The reason to look back, though, is to figure out more what are my habits, what are my behaviors, where does my money go, where historically, and that's that awareness thing. Yep. So it's not so much like look back and shame on you. That's absolutely the opposite of what we're talking about here, I think it's look back and just go, oh, okay, I see that I do this. Maybe every Sunday I go and I watch the Minnesota Vikings lose at a bar with my friends, and we have some beers and some hot wings, and that's one of my whys. That's one of my things, man. That's one of the reasons I work, right? So maybe that's the thing I like. I knew that Vikings were football. Clearly, it's not actually one of the things I like, because is Brett Favre still playing?
Oh, God.
No? Okay, so anyway, if that's one of my whys, I don't necessarily want to eliminate that, but I want to be conscious of it. Okay, that is now a thing that is in my budget, and if I want to do that, maybe I need to find a way to make the Monsters drinks a little cheaper, and that could pay for the whole football Sundays. Football, right? Foosball? Foosball? The foosball? That foosball's the devil.
The foosball is the devil.
Mickey Valancourt, the devil.
Oh,
Little girls are the devil.
Yeah, just yesterday, I had
and they are, if you have daughters. Little girls actually are the devil.
Oh, my goodness. I have
teenage
three girls.
are devils.
But, so... And I lost what I was going to say. Right when he said the teenage
just
girls
yesterday.
Are the devil, I'm like, what?
Just yesterday.
Okay, just
They're
yesterday.
still young yet.
Thank you so much.
They're not the devil yet.
No.
Yeah, exactly. They are younger. And they're
yeah,
really fun.
when they
turn
turn 12 and from 12 to about 26, when you don't know anything anymore, that's when they're the devil.
Oh, okay.
Horrible time to think
well,
about.
so yeah, just yesterday I had a conversation with a client, and this is one of our clients that's in the pro coaching program.
Cool.
And so we were going through introduction of budgeting like we are right now, just specific to her situation. And our conversation was so great. She was so real, and I brought up what you're talking about, Jeremy. I just said, hey, look, we're not here to overly, analyze and get down on ourselves that we spent this much money at Starbucks.
We're not going to chastise you. That's what the group's for. We chastise people.
We just want to go through and get an awareness. You know what I mean? Like, that's what it's all about. And when we were going through it together, it was absolutely amazing, the aha moments that were happening.
Isn't it?
And when you start allocating and understanding, like, okay, I've always felt I live paycheck to paycheck. But then when you actually put pen to paper, you realize I don't.
No, I live paycheck to 4 days after paycheck, and then I don't know what's happening.
We're overspending.
Right.
You know what I mean? We're overspending, and that's what's leading to paycheck to paycheck. And in this situation, which we talked about earlier, was also why leveraging credit more than we needed to as an extension of income, when that's not how it's supposed to be used, and that led to all these issues.
It's so funny. That is it's a small example of what we started this off with, which was that statistic about $750 billion plus in credit card debt, and my impulse spending on a monster, where literally I can do basic 101 level planning. Like, gee, should I go to the store? Well, I'm going anyway. So I mean, we've become so immediate gratification, and anyone who thinks that's preachy and anyone who thinks they're not, congratulations, you're fooling yourself. Yeah. We've all become, I want an Oompa Loompa now. I mean, that's how we are. That's just how we're constantly blasted in the face with the advertisements and the things like that. And just taking a breath taking a step back, and not having to do some over innate super King Kamea spreadsheet like the sheet we're telling you to go check out on yourcreditlife.com is wicked easy.
Yep.
It is wicked
That's
easy.
the point.
My daughter Sarah is 18 years old. She is in college and she uses our spreadsheet to track her stuff. Now she doesn't have a whole ton of expenses. She lives at home, but she does use that. It's easy enough for a college student, who's got 18 other zillion things to worry about, and it's easy enough for them to use and track their stuff. There's no reason we can't. You want to talk about the ultimate impulse? She was the one who, I've got the video of her begging, and she'll do anything if we get her this iPod. We'll do anything if we get her this iPod for Christmas. And I've got video then of, I have her begging, and she's going to mow the sky, and she's going to do like everything in the world. And then on Christmas morning, she opens up, she goes, "Oh, you got me the white one."
Oh, no.
And I've spliced that together. If that kid can do the budget and understand immediate gratification and things like that,
yes,
there is no reason the rest of us who've been working for a little while, who've been trusted with responsibilities like kids, there's no reason we can't do that.
Well, and as a recap, I want to go through, because I want to make sure that everyone listening can actually take action in what we're talking about, okay? So as a quick recap, you've gone to yourcreditlife.com. In the upper right, you clicked on Tools. There's going to be a downloadable link for the Credit Life Budgeting Worksheet, okay?
Right.
You're going to download that. That is the first step. You're going to download it to your computer, your laptop, your phone. It's an editable PDF where you can actually just input right there, or you can print it and do it that way as well. That's your first step. And then what you're doing in each area, each category expense, is you are going to make your best educated guess on how much you spend in each category.
And how are they going to educate themselves for that guess?
That's step 2.
Oh,
that's
I'm getting so ahead of the race.
Yep.
I am.
So now that's your first step. Oh, it got moved. Camera moved on me. But that's your first step. Okay,
that's an earthquake. One of those Minnesota snow earthquakes.
Step 2 is you're downloading your most recent 3 months worth of bank statements, and you're going through and you're doing a comparison to tally up how much you are truly spending on average over the course of 3 months in each category.
So you're so what we're saying is we're going to, so essentially like we're downloading 2 sheets, right? I mean, just think of it this way. This is kind of a way a person could do it.
Yep.
At first, you're doing what you think. You're guessing.
Yep.
Second one, you're using the facts.
Yep.
And I'm assuming step 3 is that danged aha moment that you're about to have.
That's what it's all about. Is the aha moment of knowing, oh my goodness, I am spending X here, and that's when you can start seeing the potential of what type of I'd say cash flow, whatever it is, allocation that you can use towards certain things where you now start spending with a plan. And so, like for instance, if you have a goal and you want to be approved for a mortgage, could be saving for a down payment.
Correct.
If you have a goal of paying down or paying off your credit cards, you can now start implementing that into the plan. If you have a goal of just wanting to have a savings account, you now can implement that into the plan.
Right.
So that's a big part of it. But then also what Jeremy was talking about is now you can start setting a budget for yourself and how much you want to spend in each area. So if you, like you brought up the football Sundays, if you know you're going to have Monster, if you know you're going to go out with your friends, we're not saying you can't do that. What we're saying is go ahead and budget that to an amount. Think about it and say, okay, you know what? There's no reason for me to be spending $300 a month on X. I think I could probably do 200.
Yeah.
I'm going to start work now. That's
what's
the
it
step
worth
start
to you?
taking. Exactly.
I
Those
just
are
had
the
an aha
steps.
moment here. Monster is not worth like $1,200 to me. Probably worth about $500 to me.
Yeah.
So I'm probably going to hit Sam's Club because I know that the ones I've got here are out. So I'm going to pop by there. That's where I get snacks for the kids for school anyway.
Yep.
It literally is just me picking up one thing when I'm there and cutting $500 and some bucks out of my spending.
Yep.
Amazing.
I love it. So that's the recap. That is the rock out action item.
Rock out action item.
This is so important. So you are now going to do an introduction to budgeting for yourself.
Right.
You're going to download the PDF. You're going to start going through it. You're going to do your educated guess. You're going to get your bank statements. You're going to figure out the facts where you're actually spending. That is the rock out action item. And what I want to go over next week is in the part 2 to this is now we can start going through and understanding debt reduction, savings plans, all sorts of stuff that you can start doing with those funds.
Can I tell them the $10 trick next week?
Yes.
Oh, they'll like that.
Yes, Jeremy, you can.
I'm so excited. I'm so excited. And by the way, important thing to note, how much is it going to cost them to download that form?
$0.
Wait, what? That's crazy.
$0.
Gosh, we actually now how much would you pay? But wait.
$0.
Yeah, so like it's like just a legit thing we provide
Honestly,
for people.
If you really think about it, you're essentially paying yourself to do this. I mean, you make
Yeah, I'm
money.
good with that.
Like literally, if you just download and go through this, you are now going to be figuring out how you can pay yourself more.
I just
instead
made
of paying other
$500
people
on this
more.
show by figuring out my monster
Exactly.
situation.
It's like, why would you
I
not
win.
do that? You know, and
You got to start with that, and then start putting that into place. That action item, as Jared just stated, and then
Yeah.
next week we can get into some more details about
Yep.
what you can do to start improving the situation and how you can change your mindset around money.
Right. If you
Yep.
guys have an aha moment, by the way, if you do have an
let's
aha
talk
moment,
about share it.
I'll tell you. Yeah, please share it. If you're watching on the free credit repair advice group, throw it in the comments section. If you're not yet following us on Facebook, I want you to go to Credit TV, CREDI TV on Facebook. Free channel for you to subscribe to for free. Great tips, great information on there. You can watch this video and throw a comment in there. Make sure you do a like. Make sure you follow. But let us know. Like, oh my gosh, I just realized that I spend all my money on ...
Yep.
I'd love to hear your aha moments. We could even talk about some of them next week.
I love it. Let's do it.
All right.
That was a great show.
That's all I got. What do you got?
That's what we got for you now.
Credit Rockstars. Every Monday, every Wednesday, mostly live, sometimes recorded. But always us
depends.
three. Right. And great info today, you guys.
Sometimes guests.
That was great. It was great to see Brian Kurzweil.
That, if you think about it, we literally were on the stage rocking out.
We rocked
We had
it.
another famous person come on and rock
We
out
did.
with us, Brian Kurzweil.
It was a cameo.
It was like Metallica
And Milli
Pantera.
Vanilli.
No. No.
The music stopped right there. Perfect
It's-
ending stream.